Wall Street is dead. The old Wall Street. The one your father knew. The one that ran on handshakes, golf course tips, quarterly reports. That world is a museum piece. Today, April 1st, 2026, the market moves at the speed of light, not the speed of a conference call. Algorithms, not analysts, drive the biggest moves. If you're still waiting for a human to tell you what to do, you've already lost. You're bringing a pocket knife to a drone fight. The game has changed. If you don't change, your portfolio will pay. This isn't a scare tactic. This is a wake-up call. The clock is ticking, louder than ever. A single tweet from a CEO can wipe out billions before your broker even answers the phone. A shift in online chatter. A whisper in a far-off supply chain. A change in satellite imagery over a factory. These are the signals that matter now. Traditional analysis is too slow. It looks in the rearview mirror. By the time a bad quarter is reported, smart money powered by AI has been gone for weeks. You need to see the storm forming, not just feel the rain. AI is the radar. It gives you speed and scale. Financials, news, filings, social posts, transcripts, economic releases. No human team can process it all in a week. AI does it in seconds. It doesn't get tired. It doesn't get emotional. It finds faint signals before massive moves. This is no longer optional. It's the core engine. Using old tools is like navigating with a 1995 paper map. Your first weapon is information. Fast, clean, actionable information. That weapon is Perplexity AI. Forget biased articles and stale analyst PDFs. Perplexity scours news, academic papers, social media, and financial reports and gives you concise, sourced answers in seconds. It cuts through the noise. It gives you the signal. Get ahead of the headlines and front-run the crowd. First, run a sentiment check. Type, what is the current market and social media sentiment for Company X over the last 72 hours? Is chatter turning positive? Is a negative narrative building? This is your early warning system. Next, dig deeper. Summarize the key risks and opportunities from the last 3 analyst reports on Company Y. You get the institutional view without the price tag. Now, get specific. Are there recent patent filings or new product announcements for Company Z not yet in mainstream news? Perplexity surfaces obscure databases and technical journals. This is where hidden gems live. Finally, cross-reference. Compare Q1 revenue guidance of Company A versus top 3 competitors. In an instant, you have a competitive landscape a junior would spend a day compiling. While others read yesterday's news, you see the market form in real time and catch sentiment shifts before price action. Use Perplexity to build a high-conviction watch list, positive sentiment, strong fundamentals, and a near-term catalyst. This is the fuel for your investment engine. Stop chasing. Start leading. Perplexity AI. Research. Once you have high-conviction ideas from Perplexity, you need to execute flawlessly. Enter the AI-driven quant bot, not a get-rich-quick robot, your discipline engine. It executes your strategy without fear, without greed, without hesitation. Humans buy tops from FOMO and sell bottoms from panic. A proper quant bot does not. Cold logic, mathematical rules, 24/7. Define rules of engagement. You don't need to code. Modern platforms offer user-friendly interfaces and templates. First, define your objective. Aggressive growth, steady income, or capital preservation. This sets core programming. Second, set risk parameters. Maximum drawdown per position and for the portfolio. The bot will enforce stop losses, your personal risk manager. Program hedges for modern reality. Inflation is a feature. Allocate on triggers to commodities, tips, energy, and materials. Backtest before risking $1. Thousands of simulations answer. Does buying tech after a 10% dip work? Optimize until you have a statistical edge. Then deploy small. Verify in the real world. Only then, scale. This is disciplined, systematic, emotion-free investing. This is how pros win. Your portfolio needs an anchor. Something real. Something that doesn't swing with every tweet and rumor. That anchor is real estate. The old hunt was slow. Listings, brokers, driving. The third tool is PropTech AI. For real estate, what quant bots are for stocks. These platforms devour data beyond MLS: zoning, permits, school ratings, crime stats, demographics, foot traffic, social sentiment, to build predictive value models. They spot neighborhoods on the cusp of gentrification, months or years before the first trendy coffee shop opens. How to put it to work: set criteria, cash flow rentals or high appreciation flips, target markets, budget, ROI threshold. The AI generates a shortlist, scores upside and risks, and flags properties, grown 15% below valuation with easy fixes. Example: a small multi-family in a C-class area. AI detects a surge in nearby permits and a proposed light rail extension, forward-looking catalysts for demand. The AI connects disparate dots to give you a first-mover advantage. You get the alert. You do on-the-ground diligence. You move while others wait. PropTech AI. Real assets. These three tools are powerful. On their own, Perplexity gives insight. QuantBots give discipline. PropTech gives a real asset anchor. Their true power is unleashed when you combine them into a single, cohesive system. I call this the wealth stack. It integrates deep research, automated execution, and hard assets. Not old diversification, a dynamic, intelligent, resilient financial engine. The process is a four-step loop. It is clear, it is methodical. Weekly: sectors, themes, stocks. Hunting early signals, turning sentiment, under-the-radar catalysts, competitive dislocations. Feed best ideas to the bot. Optimal entries, position sizing, stop-loss, partial profits, trailing stops. Robotic precision. Peel profits into real estate opportunities identified by PropTech. Integrated, not separate. Rental cash flow stabilizes income. Appreciation hedges inflation. This is your ballast and foundation. Let's make this real. No more theory. Here is how the wealth stack works in practice. It's a Tuesday morning. Run weekly Perplexity screen. Mid-cap biotech. Filter: recent positive, phase 2. Filter: spike in verified doctor mentions. Perplexity flags: biogenics. Chart is flat. Sentiment turns sharply positive. The crowd hasn't noticed. Add BGNX to your bot watch list. You don't smash buy. You let the system act. Bot analyzes volatility, enforces max 1% risk, sizes to 500 shares, finds support, places limit just above, sets stop 8% below. Weeks pass. Trial data hits mainstream. Stock jumps 30%. Bot sells 1/3, moves stop to break even. $15,000 profit lands. Don't plow back into speculation. Open PropTech. Duplex alerts. Up and coming Midwest, under 150K. 10% cash on cash. Match found. Nearby logistics hub planned. Wire $15,000 as part of the down payment. Convert digital gains into tangible cash flow. This is the wealth stack in action. Let me be absolutely clear. These AI tools are not a magic button. They are instruments. An instrument is only as good as the musician. Your judgment, your experience, your critical thinking. More important than ever, AI is your co-pilot, not your autopilot. AI handles data and execution. You think strategically. Exercise skepticism. Make the final call. Never abdicate your authority. AI can flag low price, high rents, growth signals. It cannot see a $50,000 foundation crack or a hidden crime issue. It points to X. You dig, you verify. Think like a general. Satellite recon, real-time battlefield data, automated drone strikes. But the general interprets the intel. Geopolitics, monetary policy, social trends. You decide where to deploy, when to advance, when to hold. The tools amplify your speed, reach, and analytical power. They do not replace your mind. The winning investor in 2026 is a human armed with machines. A dose of reality. There is no risk-free return. Anyone saying otherwise is selling fantasy. AI tools manage and quantify risk, tilt odds. They don't eliminate risk. Models can be wrong, data can be flawed. The future surprises. Most important rule: never ever bet the farm on a single idea, trade, or algorithm. Beware overfitting. Perfect on past, fails on new regimes. A bot that feasted on low rates may get crushed in an inflation shock. Use multiple strategies. Reasonable position sizes. Maintain dry powder. Cash to seize opportunities when others are forced sellers. Models are only as good as data. Social sentiment can be bot manipulated. Zoning records can be stale. Your skepticism is your shield. Question the source. Cross-reference. Trust but verify. Then verify again. Markets are complex, adaptive, emotional. Black swans happen. Geopolitical shocks, disasters. No model sees all. Build on real assets. Stocks can go to zero, a well-located property cannot. Discipline, risk, respect, and a layered strategy see you through. We are at a turning point. Investing has fractured into two groups, those leveraging AI, and those about to become their exit liquidity. The gap is widening. Slow, manual, emotional methods are being dismantled by the speed, scale, and discipline of technology. This is not a distant future. This is your reality today. You cannot afford to be passive. You cannot afford to wait and see. Your mandate? Act. Start by educating yourself. Explore Perplexity AI. Run queries. See how fast you reach the core thesis. Research QuantBot platforms, backtests and risk controls. Investigate prop tech services in your markets. You don't need to invest $1 yet. Build awareness and competence. Start small. Deploy a tiny bot allocation. Tuition for your education. Let it run. Learn. As profits and confidence grow, allocate to a prop tech identified real asset. Scale methodically. Prove each stage. The edge in 2026 isn't being the smartest person. It's having the smartest system. Your judgment plus AI speed and analysis in a resilient, multi-layered strategy. This is the 2026 revolution. Subscribe to InvestBuddy AI to stay ahead of the curve.